Welcome to the new video, and today topic is how you can scalp gold using supply and demand concepts. So it's very basic and simple. You should have basic knowledge about how supply and demand works, what is break of structure, what is chalk, and everything liquidity, right? And if you don't have basic knowledge, I have uploaded a full course on my channel. You can go and watch it there, right? If you haven't watched it yet. So let's start the video. So first thing you have to do is, right? So first thing you have to do is you have to go in the 2 hour, the 4 hour chart. Why? Because we have to find the trend, and the trend is our friend, right? So first we use the 2 hour chart to find the trend. And here what price was doing is price was in a bearish direction, right? So let me zoom in. So yeah, so price was in a bearish direction, then price made a pullback and started going bullish. You can clearly see, right? So we only use trend line just to find the trend. So after placing the trend line, we go in the 15-minute chart. Then going in the 15-minute chart, what you can see is here, wait, let me zoom in. Price was in a bullish trend, right? And that was the recent high. That was the recent high. Price swept the recent high and closes below this candle. So what we have to do is when price behaves something like this and sweep the liquidity, we just have to place our stop loss just like this, and you can see you can place your stop loss something like this just above this candle, just above this candle, and target this low, right? So you can see that was a 1 to 14 risk reward ratio, right? So this is how it works and how simply it works, right? You should have just basic knowledge about supply and demand. So here price again made a break of structure, sweep this high, you can clearly see, sweep this high, and then price started go bearish. So this is a very beautiful entry, and you just place your stop loss something like this and target this low, right? So that was again a very beautiful trade, that is 1 to 8 risk reward ratio. Then again what happened is price again made a break of structure, again made a break of structure, but did not mitigate our demand zone or supply zone. Again made a break of structure, but this time price made a pullback and mitigated our demand zone, and then again went bearish. You just have to place your stop loss just above this zone and target this low. So that was again a very beautiful trade, that is 1 to 4 risk reward ratio. And then what price did was price made a change of character from here. So let me remove. Price made a change of character from here, and then price started bullish, going bullish, right? So that was our extreme demand zone. Price mitigated our demand zone and targeted our first target profit. So in this case, what you have to do is you have to take your partials, right? So that was you can say that was our first profit target. That was our second profit target. That was our second profit target, and this that extreme high, you can target this as your third profit target. But what the price did was price targeted our first hit our first target, and then made a pullback, swept this liquidity, closed it below this candle, just above the candle. And then what you have to do, you have to place your stop loss something like this. When price behave, I told you, when price behave like this, you have to place your stop loss something like this, and then you can target this high. Why? Because everything here was liquidity. Now here was liquidity, right? And then what price did, price made a pullback, swept this liquidity, and then started go bearish. So you can see how beautifully it works and how you can take a benefit while trading supply and demand concepts. So you should have basic knowledge about the supply and demand. So this is for that's for the today. So wait for the next video. Thank you guys.